Hello, everyone, and welcome to Chartwise Women with Erin Swenlin and Mary Ellen McGonagle. Welcome to this Thursday, June 17th, 2021 show. We're very happy to have you here, Mary Ellen and I. How are you doing today, Mary Ellen?
Yeah, doing great. I'm sure you're feeling the same. A big old heat wave descending
Yes.
upon us out here and triple digit weather, trying to stay cool, stay
Yes,
indoors. Yeah.
my
Walk those
conditioner is running
dogs.
overtime.
Yeah. Yeah,
It's
I got
been
it.
rough. I know yesterday our high was 106.
Oh my goodness.
Yes, and I'm going to a graduation later this afternoon and evening. And of course, where we're going, the high is going to be 99 and it's
Oh my goodness.
outdoors. So
Oh
yeah,
boy.
can't wait.
You could be that person. Bring an umbrella.
Well, I am.
The people behind you might be upset, but
I
yeah.
am definitely doing that.
Oh
All right,
boy.
well, let's get into today's theme.
Mm-hmm.
Today, we're going to talk about setting sail in treacherous markets. Clearly, after the last, yesterday and the day before, we'd had a breakdown, but yesterday the market really broke down, and now we're seeing it really tumble further today on Thursday. So
Oh
we'll be
wait.
talking a little bit about how to set sail
Actually,
on
the
those.
Yeah, I was going to say the Nasdaq is up almost 1%. So we are seeing some traction, some areas. Didn't mean to interrupt, but
Oh, yes, no problem.
mhm.
Yes, very true. What we talk about is when we see this, where, for example, the Dow is down 0.7% and the NASDAQ is up almost 1%,
Do you want to,
0.88%.
are you sharing your screen?
Oh, I am not. Thank you.
Yeah. Yeah,
Uh,
definitely the Dow. We're seeing definite difference in the different
yeah,
indices
so
here.
what we call this a lot, and I picked it up from my friend Tom Bowley, is we call it a bifurcated market. When you
Hmm.
have these separations, I mean, look at the NASDAQ 100 here, it's up 1.34%. Of course, my focus is always right here on that S&P 500, but an excellent point that we definitely should be paying attention to the whole market, the broad markets. And, right now, look, also the small caps and mid caps are really suffering right now. That's going to make this really tough to come out of this decline. I don't know about you, but I'm not very happy with the market's behavior right now. It's just
Well,
been very
yeah,
difficult.
we've been in about at least a 4-week period back and fill. Chop and choppiness would be certainly a good word. So for anyone out there that's finding it difficult to make meaningful progress, just know you're not alone. It's a difficult period here.
Absolutely. And, so we're going to keep an eye on this, but when, we start to see these kinds of breakdowns, these bifurcations, volatility starts to come into play, you really want to be thinking about your wisdom of the week.
That's right. Absolutely. So mine is up there at the top, and I'm talking about how, in order to keep your ship afloat, and by that, of course, your portfolio, those stocks that you might own, it is going to be critical that you map out your plans so that you do have a plan of action. If this, then that. You want to stay safe, if you will, and at the very least, keep those losses to a minimum. So we're going to share that, of course, as we move along here.
Absolutely. And mine is that you need to keep checking your compass. The market tides can change quickly, and we're seeing that right now. We've been, it's been moving up, and now we're starting to see the tides shifting, possibly a rip tide, if you ask me. But one of the things that I talk about is keep checking your compass. So, of course, the first question is going to be, well, what is your compass? And for me, that is sector rotation, just happens to be very nicely in a nice circle. And if you look at an RRG chart, those relative rotation graphs, that's also a really great compass. We just want to know where the strength is on this chart, this compass. And right now it's looking like we're in an early to late contraction. Consumer staples is starting to fail, but utilities are starting to pick up. There are some spots in financials, and then interestingly enough, cyclicals, technology. So we know that as far as our compass goes, we're sort of leaning to this direction in that late contraction sort of period. So that is one way to keep an eye on that compass. So
Well, let's get to the task here, because what I wanted to show are some of these broader market indices to help prepare. I talked in my wisdom of the week about the importance of having a plan of action. So first up here is the S&P 500. We're looking at a daily chart, and I'm just charting where it is right now. This pink line is this 21-day simple moving average. The index is finding support upward, trending here. So seemingly we are doing just fine, but I do want to share with you the relevance of keeping these outside momentum indicators on your radar. I use an RSI, and then as momentum, stochastics are one of the faster moving momentum indicators. So currently on this daily chart of the S&P, we are in positive position for both momentum indicators, but I did want to go back to an historically tough period. If we go back to September of last year as a for instance, and what you'll want to be on the lookout for, that further downside may be ahead. The first item I look at, I can see the stochastics turned negative below 50. At this point, we're at 71, so we're not in danger. Also, the RSI trended below this net neutral 50 and turned negative. Take a look at the big pickup here in volume. So we did see a very big pickup in volume coupled with your momentum indicators trending negatively, and that did in fact point to further downside ahead. At this juncture, volume's really acting well. We're seeing a little bit more in volume today, but the good news is that is pushing the S&P into the upper reaches of its trading range for the day. So the S&P currently, and on a day-by-day basis, this can shift, but we are still in positive territory from my work. Quick look here at the NASDAQ. Erin pointed out the vibrancy there, and a whole different picture. RSI is positive, trending upward. Stochastic still up here in positive territory, finding support above that 10-day simple moving average. Your NASDAQ looking quite well. A whole different story here, of course, with the Dow Jones. We can see the Dow broke below this 50-day simple moving average, big volume. I talked about that break on the stochastics below 50, and the RSI is negative as well. So this is going to be primarily those industrial names. As we move into the show, Erin and I are going to share some of our screens. And so I'll share with you the Dow components, a quick view, and how you can get in front of and stay away from those areas deteriorating and get in front of those more positive looking names.
absolutely. And, just to add my little decision point flair, because we do tend to be fairly bearish, we're seeing a lot of things that are bothering us about this market. I think you pointed out some excellent points where, we might be seeing some positiveness, but this kind of is what has me rocked more than anything. And that is we have negative divergences, meaning if you see rising price tops and then declining indicator tops, that tells you something's wrong under the surface. And so at least for the S&P 500, right now, less than half of those stocks have their price above their 20. We have only 60%, maybe not even 2/3, that have price above their 50-day EMAs. And that continues to decline. And you need really broad participation in order to keep that market going up. But I agree with you, there are still some positives. I mean, our Swenlin trading oscillators have turned back up in oversold territory. So, this may not rock us as bad, but I mean, look at this, only 24% of the S&P have rising momentum right now. I mean, these are good things to be happening, honestly, because we want to see these oversold readings.
Right. And then the emergence out of that, of course, can be quite profitable. So,
Absolutely.
excellent points. So, we are seeing a market that's being buoyed perhaps by those mega cap FANG names and not much in the way of broad participation. So, I think that will be
Perfectly right.
unmasked as we move forward.
Absolutely true. Because the FANG stocks have rising momentum. They're looking good right now.
Hmm.
All right, so want to share some of our screens, but we're going to go to a quick break and we will talk about that when we get back. All right, we are back and we have been talking about how we weather storms in the market and what, we want to look for when we go to, take advantage of these defensive postures that are now coming into play.
And
And
I
Mary
think
Ellen, you've got a great screen for your treasure map.
that's right. So at this point, we are going to share with you some of the screens that we use to not only stay on top of the broader markets, but also to uncover stocks that are on the move. One really powerful screen, it's right here on this first interface page of StockCharts.com, and it's the market movers. So first up here, I have the S&P 500, and these are the stocks today at this point on Thursday that are up the most. So from here, you can ask for what's called a candle glance. That's a 2-month daily price chart of each of those stocks that are having really big moves today. And the relevance here is not only can you potentially get in front of stocks that are just beginning to reverse their downtrends. Here's a software stock, ServiceNow. This is a big favorite among institutions, but also you can get your arms around potential group movements. So being very familiar, of course, with the markets, I can tell you that AMD, Xilinx, NVIDIA, and then these three stocks are semiconductor names. So quite simply, I can see that there's been a rather pronounced move into semiconductor stocks, which you then from here can go ahead and explore further to see if there's potential are legs there or not. And also again in that S&P 500, because really this is the primary uh, index for the broader markets. You can also quite simply look at most active. These are the stocks that are getting the most in the way of volume. And of course, it's not all positive. So again, that candle glance view, we are on the lookout for themes. And sure enough, we can see, in fact, that a lot in the way of financial stocks, Wells Fargo and Citigroup, both down. Wells Fargo's down 6%. So very significant moves away from some of these bank stocks is something that you can uncover from this screen. And then also basic materials. This, of course, FCX are gold stocks. So another preset screen right there at your fingertips. Another area I can share quickly is I've gone ahead and put the components of that Dow index into a list here on StockCharts. And from here, you can go ahead and view that. I'm going to just quickly add this RSI indicator in descending. And we can see again, here's where the strength within the Dow is, where you want to be in some of these software and tech names. And then on the downside, the materials and cyclicals. Erin, I'm going to let you go ahead and take the screen from here. And then if we have a minute, I can go ahead and share my other screens.
Absolutely. So this, you were talking about candle glance. That's exactly what I like to do. To get to this is very simple. You go from the homepage, the Stock Charts homepage. So everybody, this is just key. If you use Stock Charts, this sector summary link right here is the best. And then I come down here and do my sector candle glance. Now your candle glance might look a little different because I have set up my own personal one, but what I'm looking at are all the different sectors, and what I'm paying close attention to is what's happening with the momentum. And you can see that there are certain areas of the market, for example, real estate is starting to turn, materials have really started to fail. And we were talking about industrials. You can see the drop in industrials, and in fact, it's lost its 50-day EMA today. But where is the strength? Where is my treasure map leading me? Utilities still look good. We have, let's see here, technology still looks good. We're still seeing that rising momentum. And honestly, healthcare, even though we've got flat momentum, still looks promising. And the other area that I'm liking right now to look in my treasure map is also in discretionary, believe it or not, because we are seeing the momentum is flat, but it does look like we're ready to get a little bit of a breakout. So that's one of the ways I do that. And then of course I do my technical scans. I did one before the program, so I didn't want to take up too much time with that. And I came up with a handful that I like. But before I share those, I want to take it back to you because I know you've got yours prepared, Mary Ellen.
You bet. So I'm going to go ahead very quickly here and share one of the preset screens that I have. And it's something that anyone that is a member of StockCharts.com can go ahead and do. This is a select sector view ETF. So I've gone ahead and sorted it by RSI, that relative strength indicator descending. I want to see where that relative outperformance is. Where is the strength at this time? So bigger picture, we can see technology up here at the forefront, and then also healthcare. So from here, you can drill down even further with some of these ETFs. First up here is the S&P Equal Weight Healthcare ETF. So we can see that that is holding up really quite nicely. Let's go ahead and take a look at the current top performer. And Erin, we did talk about utilities. This is small cap utilities, so it's even more refined as far as highlighting and pointing out where the current strength is in the markets. And then likewise with healthcare, it is small cap healthcare that is leading the charge, so to speak, and relatively outperforming. In other words, it's not those big pharma stocks. It is primarily, as I know from my screening, a number of these smaller biotech names are really coming to the forefront. So this is a view you can populate your list with any number of different indicators, but also you want to make sure you're not in those areas of weakness. This is XLB, the S&P Materials ETF. Big drop today on an already declining mode. And then also we can see that financials are getting hit quite a bit here, down 3%. So again, keeping an eye on this potential rotation out of these cyclical areas. And industrials, another cyclical area breaking down today as compared to healthcare and technology. So that is something that I did want to share with you as far as one way to stay on top of that rotation.
Absolutely. So as I said, I ran a screen before the show, and it basically asks for, it's a bullish PMO crossover scan. So my price momentum oscillator at decision point, very similar to the MACD PPO, but I use a scan to try and find the stocks that have just had a crossover or are having a crossover. So I ran that scan, I got a handful. And one of the reasons I know there's some issues with the market is that when I run my scans, I'm getting fewer and fewer bullish results and more bearish results. So there is a little bit of issue going on right now at the market. So it is important to really read that treasure map, check your compass. And so I did run this, and interestingly, the ones that when I was fishing through that I liked tended to be technology, there's utilities, and then a few others here that just sort of popped in there that look good. And so I'll just do a really quick 10 per page and give you an idea of the types of things we're looking for here. And, here's your biotech. We're looking for those crossovers, as you can see. We're looking for new relative outperformance. And one of the ones that has been popping up on my radar here now for 3 days on my diamond scans is actually Morningstar. And I just love this chart. And it just came in through just doing one of these scans. And you can see the lovely breakout here. I hadn't presented it to my diamond readers yet because we really hadn't seen that breakout yet above that 50-day EMA. And now we have it with that PMO crossover. And you can see that relative outperformance, which is doing quite well. So, between looking at your compass and then running these scans so you can start really digging in the different X marks on the map to find those treasures, the scanning is just a wonderful way to do that.
Very good.
All right, what do we have left? I know we
Yes, I think we were going to talk about how to prepare for the choppiness that we're seeing here in the broader markets. So we can see it's been difficult, and we are in the throes of a shift, and you will want to have a game plan, if you will, to prepare for that choppiness.
Absolutely. What is your game plan right now?
Sure. So let's go ahead. I'm going to go ahead and share my screen. This is one of several ways that you can stay safe, for lack of a better word. So earlier and throughout this program, we've been sharing with you areas of strength, areas of outperformance. So I'm going to go ahead and start there because we did already review the markets, what to be on the lookout for, and areas that are breaking down. But we can take a look here at healthcare stocks. They are defensive in nature. A lot of the medical products and drugs that are being developed are going to be needed regardless of any backdrop relative to the economy, inflation, or interest rates, which have all been of high concern for investors. So with this sector summary here, we can see I've gone ahead and looked at these sub-industry groupings, and medical equipment stocks are up here in the forefront. And this is something that I shared with you earlier with that ETF screen. So from here, we can go ahead and take a look at some of these underlying stocks here. I've sorted it by this StockCharts technical rating. STAA is a stock that I actually own. I've owned it for a while here, and we can see that it is still trending very nicely in an upward fashion. The RSI, MACD are also in positive territory and heading north for those that want to buffer some of that downside. Another stock from this medical products list is from my MEM Edge report. Subscribers to this report, we have been in this stock for some time as well. So we can see Waters, WAT is the ticker symbol. I'm just going to add another simple moving average here. This is a 5-day simple moving average that can be really quite helpful when these stocks really begin to have liftoff. Waters is in a very confirmed uptrend. We can see, however, that the RSI is a bit extended, but overall a look and a closer examination at some of these healthcare names can be proved to be really quite helpful as far as, again, buffering some of the bumpiness that is occurring elsewhere.
Absolutely. I actually just ran a scan while you were talking on the healthcare sector. So let me go ahead. I'm going to share that quickly with us. And what I did is I put it just like we did on the sectors in my candle glance, just so I could get some really quick. I just ran the scan. Like I said, I was very interested in what you were saying, and I thought, yes, I want to see this. And it did come up with quite a few interesting names. I don't know if any of these, like in particular, are jumping out at you, but I have to say this. Yes, go.
Edwards Life Science, that's another name from the MEM Edge report. They came out with spectacular earnings, hit a new high. We put it on the watch list, waited for that pullback reversal that took place there in the beginning of May, and added the stock to the list at that time. So that's been a real winner for us. ISRG is another one that was on there that is also looking very constructive. Another name that hit a new high, hit the watch list, waiting for that downtrend reversal. and it is taking place. You can see the PMO just now reversing as the stock is breaking out of a nice 6-week base. So
Absolutely.
a couple of very attractive stocks there that
Yes, that one caught my eye as well. And
Mhm.
also Boston Scientific. I think this one, what I like to look for is these new PMO crossovers or crossovers that are about to occur, and they happen on a breakout. And that's exactly what we have here is Boston Scientific is now breaking out. And you can see that the RSI has gotten positive, it is not overbought. And there's still some pretty good upside potential here on this one. The group is clearly outperforming, and Boston Scientific is starting to outperform the S&P. I'm not thrilled seeing that it's not performing that well amongst its peers, but given this lovely breakout, I suspect that it will probably be changing that look very soon. Align Technology also looks pretty good. It's a big move today, but you can see that momentum is now shifting back upward. And this one against its peers has been really performing quite well.
all
All
right.
right. Let's go into something that we always cover at the end of all of our shows, which is,
That's
yeah,
right.
that happened.
Mm-hmm.
And I think you were saying when we found this that Florida just keeps on giving, wasn't that?
Yeah, absolutely. It seems that a lot of these unusual headlines that come our way, actually, our producer uncovered this one, Eric, and it's all about Florida and a gentleman who used a scooter to chase a Lamborghini thief. And the bigger story is that it was the scooter rider's car. He heard his gorgeous car being started up, but he was in his house, looked out, and someone drove away. So he set out on his scooter. Luckily, the thief actually pulled over within a few blocks and was apprehended. But we can see that, interestingly, these scooters can perhaps help you. I'm not sure that I would chase a vehicle in a scooter, but yeah, let's go ahead and take a look at some stocks. This is what we like to do from here, is take a look at names that are relevant to the headline. So from here, we're looking at NIU, and this is a Chinese manufacturer of electric scooters. We can see it had a big run up here into this February area where a lot of these higher multiple names where they're not particularly having a lot in the way of earnings did fall out of bed. So the downtrend reversal at this point is not quite taking shape, but we can take a look at Lamborghini's parent company is Audi and also Volkswagen. Let's take a look because they have taken a also are part of Audi. And here we are with Volkswagen, this big upward move here. It was all about their getting into the electrical vehicle space in a major way. And we can see it did reverse its downtrend, but more recently is pulling back. And we are seeing this with a number of these electric vehicle related moves in these stocks where they originally were doing quite well but are pulling back. One last name that we can take a look at here is Microsoft. You might not think, well, what's the relevance here? I'm thinking that the thief was a teenager and maybe he should invest in an Xbox, which is manufactured by Microsoft. And perhaps they have those videos where the Grand Theft Auto, maybe get out his aggressions in that manner. But we can see Microsoft here is poised to break out of this nice 2-month base as the stock continues to advance. Erin, this is that move into those mega caps that we've been talking about.
Yes, it just you're showing a great example that those FANG stocks are really holding up the S&P right now, and this is why.
Exactly. So I think we are going to leave it at that. Everyone, stay safe. We'll see you next Thursday.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.